من شركة الجزيرة. نلتقي اليوم لعرض التقرير المالي للعام 2023. معنا في الاجتماع من الشركة مستر فينكت the CEO and Mr. Bijoy Chief of the Finance, and we have also Finance Controller Mr. John. Welcome to Jazeera Steel. We have the financial annual report. We have here with you, talking with you, Yusuf Al-Kamali from Jazeera Steel, and Mr. Venkat, he is the CEO of the company, and Mr. Bijoy John, he is the Chief of the Finance, and Mr. John, he is the Finance Controller. We will come to our meeting or our report. We can start also this report with Mr. Venkat. Please, you can start.
Are we good to go? Thank you, Mr. Yusuf. Thanks a lot for the kind introduction. Mr. Yusuf is the oldest employee of Jazeera. I think he's been there for well over, I don't know how many years now, 26, 27 years.
26 years, yes.
He's our general manager, admin, and so many other areas. He's also general manager of our Saudi operations. So, okay. Thank you, Yusuf, once again. And Bijoy, are the investors all who wanted to be there are there, or?
Just want to check.
Or should we wait for 2-3 minutes?
I think only 2 investors have joined so far.
Should we wait for a few minutes?
Yeah, we can wait for maybe 1 or 2 minutes more, because now we started at sharp 3 o'clock.
Let's wait 5 minutes, he's saying.
Yeah, fine. Yes, I think we should start now. Yeah. So
Yes.
1 second, I'm just sharing the.
What happened, Vijay?
Yeah, is it? Can you see it?
No.
Oh,
Second.
Why can't we see it?
Yeah, 1 second, sir. 1 second.
Do you want me to share it?
Yep.
Huh?
1 second, 1 second, 1 second.
Vijay.
Now it is coming. Can you see, sir?
Yeah.
no.
No. Now it's
No.
coming.
Yes, it
So-
is coming.
Put it on
Okay.
slideshow mode.
Yeah,
Vijay.
yes, yes, I'm doing it.
One more person joined.
Yeah.
Vijay, put it on slideshow mode, please.
Yes, sir. Yes, sir. It is.
No, slideshow mode. Yeah.
Yes. I'm doing it, sir. But unfortunately, the system is
Very slow, huh?
yeah very slow with this Teams meeting. I don't know.
Some internet problem is there, sir, actually.
Yeah, because I think even I couldn't go to my regular office and take the call because the building internet is gone.
Yes.
I think there is some issue with this cable being cut in Red
Yeah,
Sea all over the
Exactly.
place.
Yes,
Okay,
sir.
let's go with whatever you
Is it
have.
good to? Yeah, good to
Yeah,
go
we
with
can.
like this.
Yeah, please. I think
Yes, sir.
people can see this, I hope. Gentlemen,
It is clear.
hello? Hello?
Yes,
Sir.
sir, you can go.
Yeah,
Is
I
anybody
think we
there?
can proceed, sir. Yeah, I think we request the shareholders to respond, the investors
Yeah,
to
please.
respond.
Yeah, can the investors respond, please? Are you
Yeah, they
available or
sent
can
a
you
message.
hear
Hello?
us?
Actually.
Hello?
Yeah.
Can you hear us?
Yes, we can hear you. I responded via chat. So I already
Oh,
responded
okay,
on the
fine.
chat.
Good,
It's
good.
easier
Yeah.
that way, right? Else, if we all speak at the same time, we'll be interrupting you. So I'll respond via chat if there's any glitch or something. Please proceed.
Yeah, gentlemen, and if there is any lady, good afternoon, and thank you for joining this call. I think all of you are aware of Jazeera as a company. It was established in 1996. We are based in Oman. That is also very obvious. We operate two business lines, which is basically a tube mill and a merchant bar mill. We manufacture various kinds of products, including black pipes, galvanized pipes, hollow sections, merchant bar mill products, and rebars. Our products have diverse application in construction, scaffolding, irrigation, agriculture, engineering, public health, fencing, steam and gas facilities, firefighting, water and sanitation pipes. So we are a very well-established brand, not only in Oman, but also across the GCC, and we export to almost 25 countries around the world. Okay, our tube mill manufacturing facilities include 4 production lines with a cumulative production of 300,000 metric tons per annum, and merchant bar has a similar capacity of 300,000 metric tons per annum. Apart from Oman, Al Jazeera's key market includes UAE, Saudi Arabia, and North America. Both the manufacturing facilities are based close to Sohar Port, not more than 10 kilometers, providing a competitive advantage in terms of logistics and access to key markets. Can I go to the next slide, please? The parent company, Jazeera, has the following subsidiaries. The parent company holds 100% share, 100% of the shares in Al Jazeera Oman Steel Products Company, a limited liability company registered in Kingdom of Saudi Arabia. Again, the principal activities of the subsidiary company are import and sale of steel products manufactured by the parent company. The parent company acquired 51% shareholding in the subsidiary on 15 June 2015 and acquired the remaining 49% on 31st March 2017. We also have another subsidiary, Al Jazeera Steel Products Company LLC in UAE. The parent company holds 80% shares in Al Jazeera Steel Products Company LLC, a limited liability company registered in UAE. The subsidiary company is setting up a 450,000 metric ton per annum state-of-the-art medium section mill in Kizad, Khalifa Economic Zone, Abu Dhabi. The subsidiary was incorporated on 4th of October 2022. These are general information. We will go to the highlights of 2023. If there are any questions on the first 3 slides, please let me know. I'd be more than happy to answer. If not, I'll proceed further. Okay. In terms of highlights of 2023, I think in terms of sales and production, we had a fabulous year. Jazeera in 2023 sold its highest ever tonnage. We had our highest ever sales in history of Jazeera, totaling to 476,000 metric tons. That's close to 500,000 tons, very close to 500,000 tons. In 2023, obviously, to reach this sort of sales, we also had record production of 449,000 tons. Year on year, the profit grew by 30% compared to 2022. Part of this was achieved through improved working capital efficiency. The operating cycle based on this has reduced by 16 days. The inventory has reduced by more than 3 million OMR, and the receivables by almost 3.3 million OMR year on year. Obviously, these are operational efficiencies. This was done in a very strategic fashion in order to help us improve the operating efficiency of the plant. I thank all the senior members of the team and also the entire staff across Jazeera who made this possible. This is an incredible effort, and that was really helpful in looking to do other things in the company for the future. As a part of our strategic initiative, an MOU was signed with Oman Etihad Rail. This is very key for the future in terms of logistics movement. I think the rail movement of goods to and from Oman will be affected through rail very, very effectively in the future. And we have started this journey by signing an MOU with Oman and then walking the course with them. We also signed a strategic MOU with Emirates Steel Arkan, one of the largest regional integrated steel manufacturers of steel, which is based in Abu Dhabi. Emirates Steel Arkan is based in Abu Dhabi. The idea of signing the MOU is for leveraging strategic synergies between the two companies, especially in the light of the new medium section mill, which is coming in Kizan. After much effort and this thing from our team, we entered the Canada market for the first time. First shipments have already been made to Canada. It's a small market, but as they say, small drops make an ocean. So it's one of our product diversification and market diversification efforts, which helps us in the longer term. Major milestones achieved for the Abu Dhabi medium section mill project. Groundbreaking has occurred with all necessary permissions obtained to commence work at the site, concurrently securing the funding also. Okay. With this, these are the major highlights. If there are any questions, I'd be more than glad to take it either now or at the end of the presentation. Is there any question now, or I can ask Mr. Bijoy to go ahead with the financials, and then we can go through the questions at the end of the presentation. Bijoy, can you take up the financials, please?
Yeah, sure, sir. Thank you, sir. Good afternoon, ladies and gentlemen. We are just giving a comparison of actuals of 2022 versus actuals of 2023. The first line is basically the quantity. In 2022, we did 382,000 metric tons versus in 2023, we did 476, an increase of almost 24%, which CEO has explained in the previous slide. And one thing which we need to highlight here is that this addition is done without making any additional capex. With our existing capacity utilization, we have done this one. The revenue, even though there is a 24% increase in the quantity we sold, the revenues decreased from 147 to 140. This, as we explained in the past, our pricing method is we price raw material. What is the raw material price plus our add-on margins? So in 2022, the average raw material price was in the range of $750 to $800, which reduced to $550 to $600 in 2023. That is the reason. In fact, there is a 24% increase in the tonnages. The revenue reduced by 5%. Similarly, there is a reduction in line with the reduction in the revenue. There is a reduction in the cost of sales also. Other income is showing last year, 2022, there is a 967, and this year 414,000. This 967 includes two components. One is the dividend from the subsidiary and the refund which we received from the US Department of Commerce. In 2023, there is no refund due, and this is the amount which we received as a dividend from the subsidiary company, which the details of the subsidiary company has already been explained by the CEO in the previous slide. Selling and distribution expenses, again, there is a major drop is there, around 23% reduction in spite of 24% increase in the quantity we sold. This is mainly all the increase in the sales is in the low freight zone area. And again, there is a considerable reduction in the sale in the freight cost in 2022 because there are a lot of shortages in the containers, and the containers, as we explained last time, it is almost 4 times. The freight has gone up by 4 times. This is now reduced to the normal, near to the normal level. And because of the recent issues which happened in the Red Sea, again the freight has started going up, but I think that it will come down soon. Then there is a general and administrative expenses. There is a 23% increase. This increase is mainly due to the change in the recent labor law. So we are given the impact of that one. Then previously, in the previous slide, as CEO mentioned, the Canada, we entered the Canadian market. But before we do that one, the department of the Canadian department people came along with our lawyers. So we incurred some expenses. All those expenses we categorized and kept in general and administrative expense. And hence, this is the reason there is an increase of almost like around 23%. Even though there is a increase, almost like more than double the interest cost when compared to the 2022 and 23, the interest cost has almost doubled, more than doubled. But we were managed to arrest the interest cost, and the escalation happened only around 7%. And finally, we managed to increase the profit from 3.1 to 4 million, and increase of almost 30%. Sir, I'm done with this thing. And if any shareholders want to ask any further questions, you're most welcome.
Go ahead to the next slide, Vijay.
We are just giving some of the financial ratios. You can see, I'm just taking only the days. Inventory turnover days slightly reduced from 90 days to 87. Then debtors turnover ratio, there is a sizable reduction from 93 days to 85 days. And creditors turnover days, 14 days, it has increased to 19 days. So overall, there is a total reduction from the operating cycle days reduced from 169 to 153 days. And capital employed ratio from 2.8 to 2.5, return on asset 3.3 to 4.2%. Net profit ratio also increased from 2.1% to 2.9%. Thank you.
Thank you. Are there any questions? Yes, please.
Hello.
Yes, please.
Yes, good afternoon, Mr. Venkat. Thank you for the presentation and for this call. Just a couple of questions. First is on the Saudi market. How do you see that?
Excuse
We've
me,
heard from some
excuse me
other.
there. Excuse me there. If you are not mind your name and from, please,
Yes,
Yeah.
Mr. Yusuf. Sure, sure. I'll
please,
restart. Yes, good
please.
afternoon. This is Bishan Balla from Vision Capital. Thank you for
Yeah,
this call.
thank
Yes,
you.
you're most welcome. Yeah, I wanted to check on the status of your refund from Saudi with regards to the import duty and what the current status is for ongoing exports to Saudi market.
No, there are duties for the duties continue. There is no duty, this thing on case to case basis. Customers see, we are not paying the duty. The customer is paying the duty. Okay. And the customer works on duty exemption. Case to case, the customer gets duty exemption if they have the necessary wherewithal. Okay. We are
To
managing to sell into Saudi in spite of the duty exemptions. I mean, duties in place. I'm sorry.
so to rephrase that, Mr. Venkat, have your customers been able to obtain
Mm,
the exemption?
No,
Because I
no. Maybe
no,
one
they
or two,
haven't.
and often on case they get,
Right.
but not necessarily in not in a structured fashion.
Noted, noted. Okay, thank you for that clarification. With regards to steel prices, we witnessed steel prices jump up during Q4
But
of
one thing I have to tell
23
you, I think last year has been the best year in terms of Saudi sales also for us.
in terms of Saudi sales. Okay,
Yes.
okay.
So that also has to be clear. So the point is, if your product is good, if your placement is good, if you know what product, where there is a gap in the market, where the customer will be able to pay an incremental duty and take it, then you are in the game. Okay, and that's what we are doing. And we are a trusted brand. We deliver on time. We deliver good quality. So customers do not and we are I would go to the extent of saying that we are an efficient company. I'm not trying to be negative about the competition across the border, but we are certainly an efficient operator. So we are able to manage this, and their customers are able to absorb the duty and buy the material from us.
Noted, noted. Okay, point well
Yeah.
taken. Now with regards to steel prices, Mr. Venkat, we noticed a jump in steel prices in Q4 of 23. Whilst this year, if I'm not mistaken, the prices are down, year to date or quarter to date. So what kind of impact do you see that in this or the next quarter on your overall realization? Because the inventory cost would be on the higher side based on Q4 numbers.
Mr. Bishan, this is the game we play. To be honest with you, this is also our problem, and this is also if I have to dare say, the sort of expertise we work with. Uh, See, the problem is in the last 1 month, for just on anecdotal basis, scrap prices have gone down by $40. Okay, and so has the iron ore prices gone down. So while the first 2 months the profitability should be in place, the next 2 to 3 months it will be under stress, because what happens is, even though the finished product price has not dropped that much, the customers see the average finished product, I mean, average input costs will not drop so much because we've already bought material. But the problem is, customers look at the replacement cost of material and try to drive the price down. Okay, and that's exactly the problem in this sort of commodity business. Yes, you're right. There will be a certain amount of stress for the next two months, but the prices are not unlike in when the Ukraine war started, and 3 months after that, and even in 2022, big early 2022, the prices are not so high to start with. So how much it can drop, there is a limited band it can drop, unless there is a major war or something beyond anybody's control. I don't see too huge a drop in the input costs. Okay. So yes, there will be stress, but that's something we should be able to manage. There will be short-term impact in terms of profitability, but in the longer term, it should even out. Secondly, I'm sure you know better than us. There is also an expectation that in the third or fourth quarter, some of the markets will start easing the interest rates if all goes well. That should sort of spur demand, and we will see how it goes. Right now, for example, the Indian markets are a little down because pre-elections, the consumption has moved down. Also, end of the year, a financial year, but post-elections, the Indian market should move up, and therefore the costs, input costs from material arising out of India should move up. So there is a lot of balance happening. It's a very delicate balance which you have to play carefully. One thing I can tell you that we are not overloaded on inventory. We are very, very tight on inventory. So that should help our costs. Even if the price goes down, we should be able to buy at lower price and then go ahead with our life.
Makes sense. No, thank you. Well-rounded answer. Appreciate. I think you had mentioned on the last call that one of the suppliers from India, there was some supply disruption from India, if I'm not mistaken. If you could just comment on that.
The fact is, India was too busy with itself, Mr. Bishan. You know what is the sort of infrastructure development going on in India. So the hot rolled, we mainly buy hot rolled from India, hot rolled coils, because if I have to buy from China, the lead time is about 2 months. If I buy from India, it's about 1 month. So it makes perfect sense for us to buy from India. Previously, many years back, we could buy from Iran when there were no sanctions. We can't buy anymore from them. They also have a similar lead time, because the shorter the lead time, the less impact of volatility on our bottom line. But they just vanished. The Indians just vanished because they were too busy with themselves. But they've come back again in the last 1 month or 2 months, 1 month to be sure. And I would assume they should be there because 2 or 3 new plants have come up in India. So it's good if they continue to supply.
And in the absence of India, your backup or your alternate would be China, or is there some other player nearby which you could sort of rely on to fill this gap?
Nobody, only China.
Okay.
Only China.
Okay.
There used to be Russia once upon a time. They vanished.
Okay. Yes. No, I completely take your point with regards to the volatility being a function of the lead time, and that's the issue. So I completely appreciate that. Yeah. That's it for me for now. If something else, I'll come back. Yeah. Thank you so much for this call.
Thank you. Thank you. So Mr. Amit has asked one question. Actually, some kind of expansions which we are doing in a particular. Yeah.
Where is the question?
It's in the box, in the chat box. So I'll just read for you. This is Amit from U Capital. My question is that utilization with major upgrades to merchant bars and tube mills, according to the management discussion analysis report, what capacity utilization levels you expect in Q1 2024 and onwards? What I commented is that I just replied to him when we were talking. We have yet to commission the plant, and hence the impact will be end of this year.
Yeah, because we are in the process of commissioning these units. Some of the engineering equipment have come in. I think we are taking a shutdown of the merchant bar mill in somewhere in May, June this year. And then it will come on in line by third quarter. Then there will be stabilization. Whatever you see will be only in 2025.
Yes,
okay,
correct.
all these impact slowly will start in 2025.
Amit, I hope we answered your query.
Yes, sir. But sir, in absence of this, what utilization levels you expect?
Same as last year. I mean, in fact, we'll have a little bit of a dip because we have to take a shutdown, especially for the merchant bar mill for nearly a month. So there might be a slight loss of volume. We are trying to offset it by building stock, but we have to swallow a bitter pill for the sake of good health in future.
Okay, thank you, sir.
Sir, I hope there are no queries from the shareholders. I think then in that case, we can conclude the meeting.
Yes, please. Anything else, gentlemen? Otherwise, we will say thank you and conclude. Anything? Hello? Thank you, gentlemen. Thank you. Thank you, one and all.
Thank you.
Mr. Bishan, Mr. Asad, Mr. Nikhil, Mr. Manna, Mr. Amit. Thank you. Thank you. Thank you.
Thank you. Thank you.
Thank you.
Thank you.
Thank you.